Welcome to our channel, Pro Knowledge Center, where the essence is career development. अब बनेगा करियर, अच्छी शुरुआत, अच्छा परिणाम, bright future is ahead. And basic to advanced banking and finance. This is what the area which we are going to cover, and these are the topics from history of Indian banking system to committees, various committees appointed for the purpose of improvement and introduction of technology in banking system, overall banking sector. We proceed with our session and get ready for action. The Reserve Bank of India's affairs are governed by the options are Ministry of Finance, Ministry of Corporate Affairs, Register of Companies, the Central Board of Directors. These are the options, and the answer is the Central Board of Directors. Central Board of Directors is appointed or nominated by the government under RBI Act 1934. It consists of official and non-official directors. Our next question is, we move to next question. The Central Board of Reserve Bank of India consists of governor and not more than deputy governors along with other non-official directors. And the options are 3, 4, 5, 6. We see the answer. The answer is B, 4. We move to next question. Non-banking financial companies, NBFCs, can commence or carry on business of an NBFC after obtaining a certificate of registration from. The options are Reserve Bank of India, Register of Companies, ROC, Ministry of Finance. And the answer is Reserve Bank of India. Such certificate is required in terms of Section 45IA of the RBI Act. It also needs to meet the minimum requirement of net owned. Next question. RBI, in order to facilitate the distribution of banknotes and rupee coins, has authorized select scheduled banks to establish branches, finance department, currency chest. Distribution of banknotes and rupee coins is very important from that perspective. The answer is currency chest. Yeah. Use the concept of currency chest to facilitate the distribution of money across the country to the banknotes. The chests are regulated by the regulator, RBI. Reserve Bank of India is a regulator. All transaction in foreign exchange are governed by Act, Banking Regulation Act, Negotiable Instrument Act, or FEMA, Foreign Exchange Management Act, 1990. These are the options, and the answer is FEMA, Foreign Exchange Management Act. FEMA 1999 was enacted with the objective of, now the objective is mentioned, to facilitate external trade and payments and for promoting the orderly development and maintenance of foreign exchange market in India. It came into force from 1st June 2000. This is about FEMA. Now, another important question is, the banks which have been set up to promote financial inclusion. Financial inclusion is very proper word here. By offering basic banking, again basic banking facilities to unorganized entities, small business owners, and these things, MSMEs, etc. So these banks are known as, the options are A, B, C, D. A, payment banks, B, cooperative banks, C, commercial banks, D, small finance banks. And we see that from the very nature of what we have the question, we can understand that the answer is D, small finance bank. The main objective of small finance bank is that they provide affordable credit to entities like MSMEs, micro and small enterprises, small farmers and industries, and all these things are there. Unorganized sector, basically. 7. Non-banking financial company is a company registered under. Now, non-banking financial company, we saw the registration is required. That is a separate thing which is required for the purpose of running the business of NBFCs. But the first thing, incorporation, so far as it is required that NBFC has to be registered under some act. Now, which act is this? Whether it is under RBI Act, Banking Regulation Act, or Negotiable Instrument Act, or Companies Act. And the answer is the because NBFC is a company incorporated under the Companies Act, either 2013 or 1956, as per Section 45E of the RBI Act. A non-banking company carrying on the business of financial institution activities as mentioned therein will be an NBFC. This is for the purpose of incorporation under Companies Act. Now we move to next question. Question number 8. The difference between banks and NBFCs are due to these things are there. A, B, C. Banks accept deposits. Yes. Banks form part of payment and settlement. Yes. The deposit of DICGC cover is available. Yes. These are the things which are not there in case of NBFC. So the answer is all of the above. We move to next question. The term promissory note is defined under section dash of the Negotiable Instrument Act. Under section, which section? 3, 4, 5, 6. And the answer is section 4. The answer is B, section 4. And the definition is given there. It is an unconditional order and unconditional undertaking. Sorry, order is not there. It is an unconditional undertaking signed by the maker that I owe you this much, like that. This wording is there so far. It is an unconditional undertaking. Section 131 of the Negotiable Instrument Act deals with the protection to the. Now, so far as the options are there: paying banker, collecting banker, account holder, or none of the above. And the answer is collecting. 131 offers immunity to the collecting bank. It provides that bank should not have been negligent. It means it has taken due care. Now we just see this. Means collecting bank is being protected under section 131 of Negotiable Instrument Act if it has taken reasonable care, right? If it has acted diligently. This is so far protection available to collect. Next is Exim Bank, India Exim Bank, and Exim Bank of India was set up in the year, and the options we are going to see 80, 81, 82, 83, A, B, C, D, A, 80, B, 81, C, 1982, D, 1983. And the answer is C, 1982. The Export-Import Bank of India Act was passed in the year 1981. The bank commenced its operation in March 1982. This is about India Exim Bank. Proceed with the next question. Which committee recommended the establishment of NABARD? And the options are B. Sivaraman, T. Tiwari, Manmohan Goparia. And the answer is A. B. Sivaraman. NABARD stands for National Bank for Agriculture and Rural Development. It is an apex regulatory body established for overall regulation of regional rural banks and cooperative. This is about NABARD and the committees that we have seen. Committees. Very important question about mortgage hypothecation and pledge. We know about it. We hear in day-to-day banking business. Mortgage is a charge on which type of assets, whether it is on movable assets, whether it is on receivables, whether it is on immovable assets or stock. And the answer is a charge on immovable assets. According to Section 58A of Transfer of Property Act, A mortgage is the transfer of interest in specific immovable property for the purpose of securing the payment of money, means securing the loan. So mortgage, property given against the loan. This is called charge on mortgage on immovable assets. Which is the first small finance bank of India? Small finance bank of India. And the options are Suryodaya, Small Finance Bank, or AU, Capital, or Equitas. These are the options, and the answer is Capital Small Finance Bank Limited. It started operations in 2016. Very important section this is, and very important act. We are going to see the important provision that section 45Z C to 45ZF of the Banking Regulation Act provides for, whether it provides for locker allotment, whether it is provided for complaint redressal forum, or whether it is for the purpose of nomination and release of safety locker, safety custody articles of the nominee. Is C, nomination and release of safety locker, safe custody article to the nominee. This is about very important part. Subsection N of Banking Regulation Act defines secured loan. Secured loan. Secured. Now, secured means where the property is given, where some asset is given against the loan. And we proceed to see the options. Is granted only hypothecated against hypothecated assets or receivables or pledged securities, or a loan or advance made in the security of assets, the market value of which is not at any time less than the amount of such loan or advances. That means the security is offered, but the valuation of security is more than the loan. That is option D. And therefore, the answer should be D. Let us see the answer. The answer is D, as I am saying. Answer is D, a loan or advance made on the security of assets, the market value of which is not any time less than the amount of such loan or advances. The answer is D. Now, question 17. Company that provides a range of credit risk insurance cover. Credit risk insurance cover to exporters against loss in export of goods or services. Exporters, for the purpose of exporters. Cover is provided to exporters, whether it is bank, whether it is DICGC, ECGC, or the answer is obviously we have seen also about ECGC. The answer is ECGC, formerly Export Credit Corporation, Guarantee Corporation of India Limited. It is wholly owned by Government of India. It was set up in 1957 with the objective of promoting exports by providing risk insurance. ECGC. 18. RuPay, an Indian multinational financial services and payment service system, was launched. Whether it was launched in 2012, 2013, 2014, or 2015. Is 2014. The payment system was launched in 2014 to fulfill the country's central bank's vision of establishing a domestic, open, and multilateral system of payments. This is about we are saying RuPay. RuPay, an Indian multinational financial services and payment service system, was launched in 2014. We move to next question. Percentage of net demand and time liabilities that scheduled commercial banks are required to maintain with RBI is called statutory liquidity ratio or capital adequacy ratio or CRR, cash reserve ratio or liquidity ratio. And we see the answer. The percentage of net demand and time liabilities that scheduled banks scheduled commercial banks are required to maintain with RBI is called CRR, cash reserve ratio. The first schedule of RBI Act, second schedule of RBI Act, we know. Last session we saw that. Now, the first schedule of RBI Act contains whether it is scheduled banks, no, non-scheduled banks, or areas covered by various local boards, or none of the above. And the answer is the first schedule of RBI Act contains what it states: areas served by various local boards. One of the highlights of the interim union budget 2024-25 is that PM Awas Yojana for 2 crore more houses to be taken up in the next 2 years, 3 years, 4 years, 5 years. This is about recent interim union budget which was announced for the year 2024 to 2025, and whether the option is 2 years, 3 years, 4 years, or 5 years. So houses to be taken up in the next 5 years. Yeah. Answer is D, 5 years. For interim union budget 2024-25, the fiscal deficit in 2024 is estimated to be 4.5, 5.1, 5.5, or 6. Answer is B, 5. Fiscal deficit is estimated to be 5.1 of the GDP. PM Mudra Yojana, a flagship scheme of Government of India, was launched in the year 2014, 2015, 2016, or 2017. And the answer is 2015. PM Mudra Yojana was launched by the government in 2015 for providing loans up to rupees 10 lakh to non-corporate, non-farm, small, here it is non-farm, small and micro enterprises. The government, with a view to ensure access to banking services such as saving and deposits, it means banking services for a small account for the purpose of basic opening of account and all other things, saving and deposit accounts, remittances, credit and pension, has launched a scheme which is known as A. Swawalamban, B. Pradhan Mantri Jan Dhan Yojana, Aam Aadmi Bima Yojana, or D. And the answer which we are going to see is so far I also know is B. Pradhan Mantri Jan Dhan Yojana. The scheme was launched on 20th August 2014. It was announced on 15th August 2014 but launched on 20th August 2014. It focuses on universal access to banking facilities with at least one basic bank account for every person. Financial literacy, access to credit facilities. These things are the objectives of PM Jan Dhan Yojana 2015. Okay. We proceed with the next question. After merger of the United Bank of India and the OBC, Oriental Bank of Commerce, which bank has become the second largest public sector bank of India in terms of branch network? The options are Canara Bank, Bank of Baroda, Bank of Maharashtra, or Punjab National Bank. There is Punjab National Bank. After merger of the United Bank of India and the Oriental Bank of Commerce with the Punjab National Bank, PNB has become the second largest public sector bank of India in terms of. This is about so far merger part is concerned. Bank. We move to next question. Introduction of system. India has become the leading country in the world in real-time payment. And the option, if you see the real-time payment, then the options are there: debit card, credit card, gift card with immediate payment. Obviously, when we say India has become the leading country in the world in real-time payment in real sector, it means the answer is D. with immediate payment service IMPS. IMPS is an interbank electronic funds transfer system in the country which permits individuals to receive and send money instantly using their mobile phones or internet banking. IMPS transactions are subject to daily maximum limit to ensure balance between security and convenience. About so far this question is concerned. We are moving to next 27. This is developed in India. This payment system is developed in India and it is known as MasterCard, Visa, RuPay. Okay. RuPay supports the issuance of debit, credit and prepaid cards by banks in India and thereby supporting the growth of retail electronic payments in India. It's about RuPay. What is UPI in banking? Commonly used term nowadays. UPI, Union Payment Interface, United Payment Interface, Unified Payment Interface. Is UPI stands for Unified Payment Interface. UPI is a real-time payment system that works to transfer funds between two bank accounts. UPI does, what UPI does is that instant bill payments, you can check account balances and make transactions without using debit or credit card. It is a game-changing technology. This UPI stands. A director nominated under section 8(1) subsection 1 clause B or C of the Reserve Bank of India shall cease to hold office if he remains absent without leave from the central board for how many meetings? From 2, 3, 4 or 5 consecutive meetings of the board convened under section 13 subsection 1 of the Act. And the answer we are going to see is 3. It is provided under section 11 subsection 2 of the RBI Act that the director nominated under section 8 subsection 1 clause B or clause C shall cease to hold office if without leave from that central board he absents himself from 3 consecutive meetings of the board convened under the next question. Section 13 subsection 1 of the RBI Act provides that meetings of the central board shall be convened by the governor at least how many times in each year and at least once in each quarter. The options are 4, 5, 6, 7. How many meetings by the governor? At least meetings. The answer is C, 6 meetings. When a check is said to have been dishonored, section 138 as such we know that about when the fund is not sufficient maintained in the account. Question number 31. When a check is said to have been dishonored, there are circumstances and A, B, C, D, and we all know about section 138 also. Here, A is the situation when a banker refused to honor a check, dishonor the check, the banker has dishonored the check as it is not presented by a drawer himself. So whether it can be called as a dishonor, check is dishonored, or a banker is not happy. When banker is not happy for some reason, so whether and check is refused, whether it can be called as dishonor of check, or the payment of the amount specified in the check is not made, or clearance is refused due to certain reasons. And the answer is that answer we are going to see is answer is C. When the payment of the amount specified in a check is not made or clearance is refused by banker for some very concrete reasons. Not example, a banker is duty bound to honor the check unless the drawer has stopped the payment of the check or failed to maintain the sufficient balance in his account. When there is a difficulty, when there is a when there is an issue from the uh, person who is supposed to maintain the balance and is justified in dishonoring the check. There are two situations when the drawer himself stops the payment of that check, or he doesn't uh, maintain the sufficient balance in his account. So these are the circumstances. Otherwise, dishonor of check means the bank is duty bound before dishonoring the check to understand the reason for not paying the instrument. Let us proceed further. When a person or business entity reveals that the person is not in a position to pay the liability dues, he is or it is known to be in the state of solvency, trustworthy, bankruptcy. The answer is because the person is unable to pay his liability, his debts, liability, dues, and similarly business entity also. So that state is known as bankruptcy or insolvency. And we move to next question. And next question as we move about merger. The term merger indicates what? Merging. Okay. Now this state or condition when two companies are combined and both are allowed to survive, whether it is merger or the condition or state when two companies are combined to form a new company, whether it is a merger, or the state when two companies are combined but only one is allowed to survive, to run, to carry on the business. Therefore, the merger, the term merger has got very much, the meaning has got very much importance. What is merger? And when we see merger, we also know about amalgamation. So that we are going to see both the things now. What is merger and what is amalgamation? Here, now, the state when two companies are combined but only one is allowed to survive is known as merger. And going back, the state when two companies are combined to form a new company, B. In that case, it is an amalgamation. The state when two companies are combined to form a new company is called amalgamation, whereas the state when two companies are combined but only one is allowed to survive is known as merger. We just focus on, go to next question. Yes, merger. Next to merger. Who headed the committee to give detailed report on the NPS of the public sector banks? Ghosh Committee, Verma Committee, Dave Committee, Paneer Selvam Committee. Who headed the committee to give detailed report? NPA, about the committee was for the purpose of NPA, studying the NPA and suggesting the ways, because of the large these NPAs where there like large number of accounts were classified as NPA, and therefore there was a need to look into that and to examine that aspects because of legal proceedings and other aspects. So therefore the answer is Paneer Selvam Committee was appointed for that. Who headed the committee to inquire into various aspects relating to frauds and malpractices in banks? A. Ghosh Committee, Narasimhan Committee, Tiwari Committee, or O? Committee to inquire into various aspects relating to frauds and malpractices in banks. And answer is A. Ghosh Committee. The RBI had constituted Ghosh Committee to inquire into various aspects relating to frauds and malpractices in banks. It gave recommendations to improve internal audit machinery, introduction of concurrent audit at large branches, audit for electronic data processing system, etc. And other recommendations also were given by Motion. We move to next question. Amount paid by way of token by a contractor to an organization or by a buyer to a seller to bind them to a contract is called. Token money is given initially when contract is required to be entered into, and when money is given, then that is token money is given. So what is that called? Whether it is called price, whether it is called part consideration, whether it is called fees or earnest money. So A, B, C, D are the options. And now we see the correct answer. And the answer is earnest money. Order issued by a court, COURT, on the request of a creditor for attachment of funds of the account. Judgment data available with the bank is called injunction order, interim order, garnish order, or decree. There is an account, the account holder is holding an account with the bank, and he is also judgment debtor. In that case, an order issued by a court on the request of creditor, who is with the creditor of our account holder, for attachment of funds in the account holder available with the bank is called, whether it is called injunction order, interim order, garnish order, or decree. And the answer is, it is C, garnish. So this is for this session, and we will continue with our other sessions also, and on various topics as well as this topic.